Hey everyone, this is C Crypto Daily Buzz. Today is Wednesday, March 19th, 2026, and this channel brings you the most important crypto news for investors across Southeast Asia. We've packed 6 major stories for you today, so let's jump right in. The Federal Reserve just wrapped up its March meeting and held interest rates steady at 3.5 to 3.75%. Exactly as markets expected. The bigger story is the updated dot plot. The median projection still shows just one 25 basis point cut for the rest of 2026, unchanged from December. Out of 19 officials, 7 favored holding rates where they are, 7 projected one cut, and the remaining 5 were split between deeper reductions. Chair Powell acknowledged that oil-driven inflation from the Iran conflict is complicating the outlook, with core PCE still running around 3.1%, well above the 2% target. He also noted that the economic projections are not set in stone and urged markets not to overreact to the dot plot alone. Bitcoin briefly dipped below $71,000 right after the announcement before recovering to the $73,000 range as traders interpreted Powell's tone as cautiously neutral rather than outright hawkish. My take on this? The Fed is basically telling the market not to expect relief anytime soon. For crypto investors in the Philippines, Vietnam, and Indonesia, this means the strong dollar environment will likely persist, keeping local currencies under pressure. If you are holding positions with leverage, this is not the time to get aggressive. The next real catalyst will not come until the June meeting at the earliest. Major crypto exchange Kraken has officially paused its multi-billion-dollar IPO plans, citing the ongoing bear market. The exchange had formalized its public listing process just 4 months ago, but falling trading volumes, declining asset prices, and shrinking valuations across the sector forced a strategic reversal. Kraken is not alone. Several crypto firms that filed for listings in late 2025 are now reassessing timelines as the market continues to slide. The exchange says the IPO is paused, not canceled, and will restart once conditions improve. My personal read on this: when a top 5 exchange walks away from an IPO window, it tells you how bad sentiment really is behind the scenes. Retail traders might see prices stabilizing, but institutions are clearly not confident enough to put their balance sheets on display. For Southeast Asian investors, this is a signal to stay cautious. The recovery everyone is hoping for may take longer than social media suggests. The FTX Recovery Trust announced it will distribute approximately $2.2 billion to creditors starting March 31st. This is the 4th payout round, and it brings general unsecured claims and digital asset loan claims to a cumulative 100% recovery. A remarkable outcome for a bankruptcy that many thought would leave creditors with pennies on the dollar. Convenience claims holders will receive a total of 120%. Separately, the trust set an April 30th record date for the first payments to preferred equity holders, scheduled for May 29th. My honest assessment: full recovery for FTX creditors is a genuinely positive milestone for the entire industry. It proves that even after one of the biggest frauds in crypto history, proper legal processes can deliver real restitution. For investors across the region, especially those who were burned by smaller collapses, this should reinforce the importance of using licensed, regulated platforms. The $2.2 billion in fresh liquidity hitting the market could also provide a modest tailwind for prices later this quarter. We still have 3 more important stories to cover. Let's continue. All right, let's move on to the next 3 stories. European law enforcement just dismantled one of the largest illegal Bitcoin mixing services in history. Europol, along with Swiss and German authorities, seized the servers and domain of CryptoMixer, a platform suspected of laundering more than 1.3 billion euros, roughly $1.5 billion, for ransomware groups, darknet markets, and cyber criminals. Authorities confiscated approximately 25 million euros in Bitcoin and over 12 terabytes of data during raids conducted in Zurich. A seizure banner now replaces the CryptoMixer website. My take on this: Mixer takedowns are becoming increasingly aggressive, and this is the largest one we have seen in Europe so far. For everyday investors, this is actually good news. It means regulators are getting better at tracing illicit funds, which strengthens the case for legitimate crypto adoption. However, if you are using any privacy-focused tools for transactions, make sure they are fully compliant with local regulations in your country. Authorities in Singapore and the Philippines have been tightening their own anti-money laundering frameworks as well. Bitcoin's network hash rate fell roughly 8% over the past week, dropping to around 920 exahashes per second. Analysts point directly to the Iran conflict as the primary driver. Surging oil prices have pushed energy costs higher across multiple regions, squeezing mining profitability. Hash price hit a record low of $27.89 per petahash per second per day back in February, and conditions have barely improved since. Mining difficulty is expected to drop by as much as 10% at the next adjustment, which could ease pressure for surviving operators. My personal read on this: a falling hash rate does not immediately threaten the Bitcoin network, but it does signal stress in the ecosystem. When miners are forced to shut down rigs or sell holdings to cover electricity bills, it adds selling pressure at the worst possible time. For traders in Vietnam and Indonesia, where electricity costs are already a concern for local mining operations, this is worth watching closely. If energy prices stay elevated through the second quarter, we could see further consolidation in the mining industry. The Philippines' largest crypto platform, Coins.ph, disclosed a security incident involving unauthorized push notifications and emails sent to users on March 8th. The phishing messages redirected users to a fake website designed to steal wallet credentials and trick them into transferring crypto. Coins.ph confirmed the breach was limited to a third-party messaging vendor. No user accounts, personal data, or funds were actually compromised. The malicious website has been taken down, and the attackers' known wallet addresses have been blacklisted. My honest assessment: even though no funds were lost, this is a wake-up call for every crypto user in the Philippines and across Southeast Asia. Phishing attacks are getting more sophisticated. They are no longer just suspicious emails. They now come through official-looking in-app notifications. Always double-check URLs before connecting your wallet. Never click links from push notifications that ask you to verify your account, and enable two-factor authentication on every platform you use. This applies whether you are on Coins.ph, Maya, or any other exchange. Before we wrap up, here's a quick recap of today's 6 stories. Story 1. Fed holds rates steady. Dot plot still shows one cut in 2026. Story 2. Kraken pauses IPO as bear market crushes valuations. Story 3. FTX to pay $2.2 billion to creditors on March 31st. Story 4. Europol dismantles crypto mixer, $1.5 billion in laundered Bitcoin. Story 5. Bitcoin hash rate drops 8% as Iran war drives up energy costs. Story 6. Coins.ph confirms phishing breach through messaging vendor. This video is for information and education only and is not financial advice. All investment decisions and risks are your own responsibility. If this video was helpful, please subscribe, hit the like button, and turn on the notification bell. For real-time alerts and trading signals, join our Telegram channel, link in the description. See you in the next one.